Hey traders, welcome back to BULLISH Capital. On today's video, we're gonna go through the weekly watch list and also through the market update. Remember guys that this video is for informational purposes only, it's based just on my personal opinion and it's not financial advice. So we actually got a pretty kind of an intense week last week. It was pretty interesting to see that if you watch the previous video that I made last week, you can find the link in the description, you will see that we were expecting this kind of roadmap. Right, the expectation is a continuation to higher prices in the SPX, but we were actually prepared for any pullback that we might see in the market. Remember that one of the reasons was explained on that video. We talk about the pattern, the island pattern that we had in the SPX, what happened, what was the psychology behind the quarter end FOMO buy-in, and what was the expectation for the first week of July. So if you haven't checked that video, make sure to check that video. The link is gonna be in the description. Also guys, remember to like and subscribe, and also follow me on my Twitter account at BULLISH Capital. So let's start here. The first chart that I want to cover in this video is going to be the VXX. The VXX is going to be a pretty similar instrument as the UVXY. So basically this is just an ETN that is tracking the short-term futures of the VIX. So what I like about the VXX and what I like about the UVXY is that we tend to see more of a pattern pretty similar to equities, right? Because remember that if you're watching just the VIX, you're gonna be looking a lot at, because the VIX is a mean reverting instrument, so you're not gonna find like super clean patterns in terms of like you find in equities. So kind of the VXX, we tend to see more of that trend following kind of pattern that we find in equities, and that's one of the reasons that I like watching this instrument as well. So what actually happened last week is that we had that pretty intense day in terms of volatility, right? We saw volatility jumping over 20%, right? The UVXY jump over 20% intraday during that day. But something pretty interesting is that we actually jumped and we came right into that 21 exponential moving average wave. So that's something that I cover, that I tend to cover many times on this channel. The importance of watching something as simple as the 21 exponential moving average wave is going to keep you on the right side of the path of least resistance. So now that I got my drawing tools, you can see right here that we had that jump right into that 21 exponential moving average. And one of the reasons that we were expecting that is because the UVXY, or the VXX in this case, was not making any lower lows, right? We saw that higher high in the SPX. We didn't saw that kind of price action in the VXX. So that's one of the reasons that I was expecting some kind of pullback in the market, and we actually got it. So now that we got this reset, right, this test of the 21 exponential moving average wave, and we also got that rejection, you can see the wick in the candle that we had on Thursday. Now my expectation is a continuation to the downside in the VXX, and a continuation to the upside in the SPX. So how low is the VXX gonna go, right? I do have a target based on Fibonacci all the way down here to somewhere around 23. So the expectation is that we're probably gonna see that, but of course we have to see what kind of pattern do we get. Do we get a test of this low, then another spike, and then a continuation, or we get a completely different kind of a structure here where the VXX doesn't lose these lows right here, and the SPX makes a higher high, and then we have a huge divergence, and then we can see some really interesting patterns forming for August and September. But that's kind of another conversation. Right now what I'm seeing is that the VXX got rejected as resistance. You can see that we have this volume shelf as well acting as resistance, and my expectation is a continuation to the downside. You can see that all my indicators have negative momentum, so that's also another confirmation. We have negative momentum, and then we of course have a downtrend in price, which is really important. So that's one of the theses of why we're going to continue to see that move to the downside in the VXX, in the volatility, and then a continuation to the upside in the SPX. Let's take a look at the ES futures here, and this is kind of the roadmap that we were seeing, right? Let me just hide these alerts that I have right here. And this is something that we were expecting, right? We were expecting that after this huge move to the upside, we were running into some supply, testing that demand, that supply, sorry, once again, and then coming back into support. So you can see right here that we come right into support. We already measured this level. Remember that this measure is just the Fibonacci zone, the 50% retracement, the 61.8% retracement measured from this low right here into this high right here, and we were expecting buyers to appear at this level. Also, it's really important to notice that we also have this volume shelf right here at price. So that was another confirmation. We're seeing volume, we're seeing Fibonacci, and then of course we have this 21 exponential moving average wave, which is really, really important. Now in terms of momentum continues to be positive. We do have a divergence, right? We do have a divergence, and what do I mean by a divergence? We have a higher high in prices, but the momentum did not make a higher high. You can see that in both of my indicators, right? That momentum continues to go lower. This doesn't mean that price cannot make a new high, but it's something that we have to be aware of, especially if we start to break these levels right here, because those divergences can act pretty rapidly, and then we're probably gonna see a more of kind of a pullback, but that's not the expectation right now. The expectation is that these levels are gonna hold, because we don't have any reason to think that this pattern is not gonna continue to the upside, because this is a bullish pattern, right? This is a pattern of higher highs and higher lows until we break some pattern in the structure of price. So let's just keep it pretty simple, and the expectation is for a continuation right into this target up here in the ES futures. So let's jump into the watch list. Let's keep this video short and sweet. For the focus list that I have for next week, as always, you can take a screenshot right here. Let me just expand this a little bit. You can take a screenshot. Mostly I'm gonna be focusing just on the indexes. I want to keep it pretty simple, especially after the huge run that we already have in the last couple of months. We're starting to enter into a seasonality that we tend to see more volatility, especially after July OPEX is done, which is in a couple of weeks. So I just want to keep things very simple. I'm gonna focus mostly on the indexes, and my favorite setups are gonna be the first four setups, which is gonna be the NQ, the ES, the RTY, and the SMH. So as for the first setup, I already talked about the ES. Pretty simple setup. This is the buy zone, this is the target, your stop is gonna be below here. Pretty simple setup. Now let's talk about the NQ. Let me just make this a little bit smaller so we can see the price a little bit better. Let's talk about the NQ, and the NQ is a pretty similar setup, right? Pretty similar setup. You can see right here the volume shelf, which is pretty encouraging to see this kind of volume as support. We have the volume shelf, we have demand, we also have a Fibonacci zone that acted as support, which is pretty impressive, and of course we have momentum. I have positive momentum in both of my indicators, but of course we have the same kind of divergence, right? And well, we don't have a divergence here because we haven't made a higher high, so we don't have a divergence in the NQ. So let's just see what happens, right? The expectation, as always, the only thing that we can do as traders is act in our levels of interest, and then look for continuation in whatever direction we're trading. So the setup is pretty simple. This is the buy zone, this is gonna be your stop, this is gonna be your target, right? Pretty simple. That's what I'm watching for the NQ. Let's take a look at the RTY. I really like the RTY here. It's one of my favorite setups, and one that I'm looking to take out this supply right here, right? This is a level of supply that has been acting pretty strongly here in the RTY. I'm looking for the price to take out that level of supply, and we have the pattern. You can see that we have a squeeze. And for anyone who's asking, I actually integrated the squeeze. I combined the squeeze with my momentum indicator, the backup trend indicator. I combine those both indicators. I make just one indicator, that way I only have one screen. So this is actually pretty cool. It's very easy to use. So you can see that we have a squeeze, we have positive momentum. You can see that momentum has been finding support as well, which is pretty encouraging. And you can see that we continue to hold the 21 exponential moving average wave. And that's everything that I need to know, right? We continue to make these higher lows, and price continues to hold that 21 exponential moving average wave. So my expectation is pretty simple. We reclaim that 21 exponential moving average, which is the middle line of the wave. And now I'm looking for a continuation to the target. That's everything that I'm looking in the RTY, and of course the stop is going to be a break below these lows. So keeping the setup pretty simple. I'm looking for a continuation to the upside, but you can see that we have a little bit of resistance here. You can see that we have the volume shelf and we also have supply. So we have to see how price interacts with those levels in the coming weeks. And then finally, I have the SMH. The SMH is going to be with the semis, and the way that I'm playing these guys, by the way, I'm using the leveraged 3x ETFs. So for example, if you want to trade the SMH, I'm using the SOXL, which is a pretty liquid and amazing instrument to trade. I think it's actually more liquid than the SMH itself, so that's pretty cool. So as for the SMH, basically the same setup. Once again, you can see that we came into the wave. I'm using the wave as a level of demand, as a level of support, and then I'm just looking for continuation into the target right here. This target is the Fibonacci extension measure from this low right here to this, from this high right here to this low right here. That's the 1272 extension to the 1618 extension, and you can see that momentum continues to be positive, right? We are above 50 in the trend oscillator, and you can see that in the backup trend, one of the main lines, which is pretty similar to the MACD, is also above 0. So that tells me that we have gas in the tank for some continuation, but given that the lower line is below 0, we can expect some chop, and that's exactly what we're seeing. You can see that my candles, they turn black as soon as the momentum, as the lower momentum, right, the second line also drops below 0. As soon as we have that and I get the black candles, I expect chop. And the only way to trade chop, in my experience, is to buy the exhaustion portions of chop, right? Because what kills you in chop, because chop is basically this. Chop is basically this. You have a square, and then you have basically price trading inside the square, right? So the only way to trade chop is execute at the kind of the exhaustion at the demand or the supply. So it's pretty simple. I don't see any problem with trading chop as long as you continue to build your position as close to support if you're bullish, and if you're bearish, build your position as close to resistance. That's the only way that I see that you can trade chop. So it's gonna be my favorite setups for next week. I also have some others here, you can take a look at it, but I'm mostly gonna focus on trading the indexes. I think that's gonna be the easiest way to act. It's gonna be the easiest way to act in case we get some changes in the structure or anything. By trading the indexes, it's gonna be pretty easy to adapt. So once again, thank you so much guys for watching the video. I hope that you have an amazing weekend, and I will see you on future videos. Take care and bye bye.